2, 1. Welcome to the second live of the Forex Gentlemen team. We're here with Marc Antoine. We're here with Thigao Barbosa and Rob Evanek in the back end. Marc is the head of global macro here at FXG. Thigao is the head of trade management at FXG. And we got a really good session here for you guys. We're going to go over a few pound pairs, actually one pound pair, but I'm going to give you an example on a few others. And then we're going to talk about the economic, political environment. Marc's going to get into his thing. Thiego's going to get into his thing. And the whole point of this is just to throw out good content and knowledge for all of you out there so that you can understand what drives the market. Okay, so today we got a lot of things going on in the market. Okay, there's a lot of political, economic uncertainty, and this uncertainty is shown in the market. Right, we're seeing levels of high liquidity and we're seeing levels of low liquidity. This is because there's uncertainty in the market. So investors are waiting for interest rate announcements. Investors are waiting for different type of information to come in that would give them a better idea of where to put their money. Okay, so today we're going to talk about pound Kiwi, all right, pound New Zealand dollar. That's the analysis we're going to go over today. And I want to talk about how before, I want you to pay attention how structure plays a key part of this analysis and potential entry, okay? Without the structure, we're just shooting into a barrel. We really don't know what's going on. The structure gives us a good idea of where buy pressure will come in, where sell pressure will come in, and based on that, we can find higher probability entries either to the upside or to the downside. So right to pound Kiwi, as usual, we're starting on the monthly. We need to find area sensitivity and we need to talk flow. So here we identified our monthly upper and our monthly lower zones. We identified our monthly upper by looking for area of sell and buy pressure. And again, at our monthly lower zone, we see sell and buy pressure. So every time price comes in contact with its monthly upper zone, we see sell protection to the downside. And every time price comes in contact with its lower monthly zone, we see buy protection to the upside. So now, after we talk about area sensitivity, what do we need to talk about? We need to talk about flow, okay? What do we see in terms of buyers and sellers? So on the monthly time frame, we see sellers have control. Strong push to the downside. Buyers entered at its lower monthly zone as expected. So here we have a higher time frame push to the downside. What's after a push to the downside? An exhaustion to the upside, where then sell pressure entered the market for a continuational push. But what I want you to notice in terms of price action is that price is seeing a substantial amount of buy pressure pre-contact of its lower monthly zone with a bullish engulfing candle. So when we take it down to the weekly, what we're looking for here is to see where our next area of sell pressure will be. So down to the weekly, we identified our weekly upper and our weekly lower zone. Again, area of sell protection, area of buy protection. This is a strong area of sensitivity. So we know that we had a monthly push, monthly exhaustion, and here's a monthly continuational push. But what do we see? We see an injection of buy pressure before price came in contact with its monthly lower zone. This only happens when there's a strong change in control, okay? So we know that this is a higher time frame at the moment, bullish market. Now, we know there's a lot of political uncertainty, again, economic uncertainty. So we have to be risk on. If we're entering any new trades, we have to lower our risk. That's standard across the board at the moment, okay? But what do I notice here on the weekly? We notice that price broke right back above its weekly lower zone, okay? This is a stop hunt, okay? That's why winners will only enter at completion of exhaustion. Price action confirmation at completion of exhaustion. Here's the push to the downside. Exhaustion, we did not see price action confirmation to the downside, which means this potential entry to the downside became invalid, okay? A lot of people lost a lot of money on this potential short because price did not come in contact with its lower monthly zone. So what do we see? We see stop hunt, price came right back, breaking above its weekly lower zone to the upside. On the weekly time frame, where is its next area of sell sensitivity? It's sell pressure, that's right. It's weekly upper zone. price will not hit a substantial area of sell pressure until its weekly upper zone. Okay, so we do know that there is some room to play with. Let's take it down to the daily, see if we can find a daily area of sensitivity, which would then give us a good potential higher probability entry to the upside to our weekly upper zone. All right, down to the daily time frame. Again, we identified a daily mid-range zone. Every time we take it down a time frame, we must look for price's mid-range zone. Sometimes there's just one zone. Sometimes, as we can see on the weekly, there's two zones. We need to identify area sensitivity. So we can see horizontal buy and sell pressure. We know that there will be some sensitivity at contact of our daily mid-range zone. So this is good. Why? Because this is the last area of sell sensitivity before price has free range to its weekly upper zone. So if price is able to make a push, exhaustion, and price action confirmation to the upside for a full cycle, it has free range to its weekly upper zone. So let's talk about entry. All right, we took it down to the 4-hour time frame to talk about entry. Here we see price finding sell pressure at its daily mid-range zone. This is what we identified on the previous time frame, an area sensitivity. So what are we waiting for? We're staying patient. We're waiting for price to make a completion of a push. What's after a completion of a push to the upside? An exhaustion to the downside. We're waiting for price action confirmation before an entry to TP2, which is located at our weekly upper zone, because this is our next area of sell sensitivity. Now, pound is seeing buy sensitivity across the board. Here we've taken it to pound Swiss franc. Pound Swiss franc has reached its lower monthly zone. We know that there's going to be buy pressure at our lower monthly zone. All right, we've taken it to pound USD. Pound USD is now reaching its previous low. We know that there's going to be buy sensitivity at its previous low. So what I'm trying to say is there's a potential opportunity if price is able to make a nice push and exhaustion with price action confirmation, breaking its daily to the upside, there's a nice opportunity for a potential long to our weekly upper zone, which is our next area of sell sensitivity. So the key here is, even though there is economic and political uncertainty, there's a lot of things going on that we need to be careful of right now. When we identify proper area of sensitivity and structure, we can still create high probability entries. And that's the key to this analysis. Okay, so that's it for my analysis. I'm going to pass it on to Marc. Marc is going to give you substantial amount of information at the moment. So make sure you have open ears, you're listening. And on to you, Marc.
Thank you very much, David.
Welcome.
Right. Everything works fine, guys. Thank you very much, David. Great analysis. Great example, guys, for to look at structure, not just price action, but wait for price action confirmation after exhaustion and after a candle confirmation. So great example, David, there. So guys, can you guys see the screen? Yeah. All right, perfect. All right, so a lot of things happened in the market this week regarding China, regarding Brexit, regarding Eurozone, regarding the US dollar, regarding China and the fixing. So we're seeing right now a political war, I would say, between China and the US. What is really important to understand is every traders that comes to the desk in the morning, they try to trade with a bias, directional bias. What it means? It means that when you sit down, you look at your computer, you seek information. So the first market to open is the Asia Pacific. So in Asia, what is really important to understand is you get some news, some big headlines regarding China. Okay, so China says things. So China could say they would they will retaliate tariffs. They will try to talk with the US. They can say whatever they want. That means that it's really important to look at major headlines during Asia. And what we're seeing at the moment is we're seeing two major countries fighting each other's about the news. So one news happened in the China session, and when it comes to the U.S. session, the news is not the same, and it's changed. So we can see market sentiment change very quickly by this all scheme that we're seeing at the moment. So I will start with China, because we all know that U.S. and Mr. Trump election comes in 2020, so in a year. So we all know that he's going to start to prepare for his next mandate, and he wants to win absolutely. And what he wants the stock market to be at the all-time high. He wants the U.S. economy to be really well. He wants unemployment to be really low. He wants wages to go up, and he wants inflation to be on reach. So he wants the best economy he can have, and he wants to build more within the U.S. So we're seeing a huge political fight between China and U.S. And China is, like, I would say, is the bear, and U.S. is the bull. So U.S. attacks China, bully China, and China just sit down, try to fight a little bit with U.S., but they're playing the long-term game, okay? So what we're seeing China, which is a country that wants to talk to the U.S. So what happened when they want to talk, or when China, when we're seeing positive headline within the Chinese market? It means that equities and confidence from the market participants, which could be hedge funds, which could be pension funds, which could be large institutions like Goldman Sachs, Barclays, JP Morgan, when they're seeing positive headlines, they try to inject and they try to put some inflow of cash into the U.S. economy, into the equities market, where they will get the bigger reward for their risk. So this kind of market participation is really important to understand. And every day when you sit on your desk, it's important to have a bias in the market, a directional bias. So this week we've seen a lot of movement from China and the U.S. and there's a lot of volatility happening at the moment. So it's important to have one bias, and when you have this bias, you can start to look at your setups and trade more in depth. I will show you an example of really what could happen and what happened in the market. So US and China in touch, stocks higher, gold and bonds lower. So what is gold and bonds? Obviously, they are safe havens. So when stocks and equities shoot higher, it means that we're in a risk-on environment. When it's safe havens up, when gold and bonds are up and rallying, we're seeing equities usually go lower, and we're seeing a risk-off environment. So quick fire risk-on, really important. As with the trade comments, can be prepared for the opposite reaction with one side denies the headline. So China, just here, China Mofcom says both the US and China are in touch. So they're talking. So we're seeing what? We're seeing the S&P rally. And just after, we're seeing US and China in touch. We're seeing gold sell-off. And after China and US in touch, we're seeing treasuries sell-off. So really important to understand what's happening in the market and be really prepared for every market open, which is the Chinese market and the US market, to be aware of major headlines from trade war. All right, so this is it for regarding trade. And obviously, we're in September. Market participants will be higher, much higher. People will come back from vacation, so expect more money to be put in the market and more volatility to come. So it's really important to have one bias, one directional bias. I would say it again, but it's the name of the game. Sorry, guys. All right. So what happened also this week? Some major headlines yesterday. I would say really major headline. Our friend Boris Johnson, explosive move to get his way on Brexit, suspend Parliament. So I don't know if you guys remember on at the beginning of the year what Trump did. He did suspend the jobs of the important jobs. He did suspend it on early of the year. And what happened? It was a government shutdown. I'm sorry. So Trump did a government shutdown earlier this year. And he tried to pass a political goal. He tried to pass something which we were talking about the wall. So at the moment, back then, people, they didn't want to pass the vote for the wall. They didn't want to build the wall. Building a wall is building major infrastructure, is creating new jobs, is injecting money in the economy. So absolutely, it's good for the economy in terms of economics. But we're seeing a kind of the same situation now with Boris Johnson, and that's really important to understand, because Boris Johnson and Mr. Trump, they seem to be friends. When Boris Johnson got elected last 2 weeks, we saw Mr. Trump tweeting and being happy about the result. So we're seeing kind of the same situation now with Boris Johnson. So he's seeing that Parliament is a little bit weak, and he's seeing that he has a chance to go through the October 31 Brexit deadline, and he doesn't want the other people, the other person of the Parliament, to put him barriers. So he doesn't want to get he doesn't want his plan to be not succeed. So he will make whatever it takes for the October 31st to have either an extension or either a Brexit deal. What is really important to understand regarding this is so Boris Johnson did a pretty let's say pretty special tactic there. He went to ask the Queen for a parliament to freeze the parliament, and she did accept it. And the Queen, she never back then in the past, she never got involved into the political world of the Great Britain. So it's really important, because we're seeing something new, something special, and that means that it's really important, because if you go and ask the Queen to get some help, it means that we're dealing with something really major there. So it's important to Boris to pass something, some kind of vote, some kinds of confidence around the Article 30, the Article 50 about the backstop, the Northern Ireland backstop, and also some sort of deal with the EU to help businesses to work together, because that's the main issue now. It's not about immigration anymore, like it used to be a few years ago. It's really a main political idea around trade, so around partnership with trade with the European Union and the Great Britain. So Parliament will return on the 3rd of September. But guys, really important to know that it doesn't mean that the Parliament will return on the 3rd of September, that there will be no volatility on for this asset. So remain seated, remain calm, and trade it really safely, because one major headline could move this asset of 100 ticks or more. So it's really important to be aware of that. So the break for conferences, and the Parliament is scheduled to return on the 9th of October, and the EU summit will be on the 17th of October, and on the 31st, the Britain leaves the EU. So one thing that is really special regarding Boris Johnson is he wants to leave the EU with either a deal or either hard Brexit or a soft Brexit. Obviously, the soft Brexit is the main goal for him, but hard Brexit, it means that, hey guys, we're just going to leave, because that's what the people want. We're going to try to make a plan, and we're going all in with that plan. So it's kind of, a little bit scary in terms of all these political uncertainties happening at the moment in the world. The 2-year and the 10-year inverted yield curve. We're talking about recession in Germany. We're talking about commodities that are in the bearish markets. We're seeing bad numbers in China. So it's kind of worrying me. But it's important to understand that when you see bad news, usually at the end, you see always good news. So keep that in mind, guys. So in terms of, let's talk about the US politics now. In terms of the next FOMC decision, which is the 18th of September 2019, in absolutely 2 or 3 weeks. So we're seeing a rate cut of 0.25 or 0.50. So not more than that, 99.6% of chances there. So keep that in mind. 18th of September, that will be something really important to monitor. Will the Fed cut interest rate, or will they not cut? And if they cut, how much will it be? Will it be priced in at the moment, like we're seeing, or it will be not pricing? So if they cut more than 50, obviously that will be a shock. If they cut 0.25, that will be priced in. And if they don't cut, that will be a shock. Okay, keep that in mind, guys. So let's talk about Canada, our great country, David. Such a great country. So Canada at the moment, it's one of the only country that is doing really well. All right, guys. So we're seeing investment from Trudeau with the pipeline on the western part of Canada. We're seeing numbers that are really good. We're seeing inflation in line. We're seeing a growth there. We're seeing huge potential there for the Canadian economy. And like Citi said earlier this week, yesterday, I believe, the Great Bright North, as the trade war drags on Canadian exports 75% to the US, will increase. All right, guys? And Canadian goods will be substitute for US goods on the world market, and they don't see Bank of Canada rate cuts. But some more 2 million downside volume, very cheap with Bank of Canada next year. What I want to underline there is Goldman are completely the other way. They see a dovish Bank of Canada. So usually when Goldman Sachs, from my own experience, when they put some news and headlines public like this, available publicly, usually there's a reason behind, and usually they don't. Let's say when you play cards, you don't tell your buddy or your opponents what you have in your hand. So you try to be very precisely, and you try to keep the information for yourself. So what I'm seeing now is I'm seeing the Canadian economy doing well. I'm seeing foreign direct investments in Canada. It's highest in 4 years. By foreign direct investments, I mean people from outside Canada. So it could be Asian investors, could be European investors, could be Southern American investors. We're seeing inflow of capital in terms of the Canadian economy. So they invest in Canadian companies, either they invest into Canadian treasuries, either they invest into Canadian infrastructure, but we're seeing investment in the Canadian economy. We're seeing huge inflow. So that is really, really, really important now because it means that people have confidence. Canada recorded its largest inflow. Inflow means injecting money in terms of one economy, of foreign investment in 4 years. Another sign growing global trade tensions haven't reduced the appetite for the northern nation assets. Direct investment from abroad rose to 18.7 billion, US 14 billion in the second quarter. That's the strongest net inflow of FDI since the beginning of 2015, probably reflecting Newmont Mining Corp's mega takeover of Gold Corp Inc. earlier this year. All right. So obviously it's a Gold Corp Inc. Gold incorporation. So we're seeing every gold ETFs, every gold investment rallying now on global uncertainties happening in the world. But Canadian economy is doing well. So next week, on the 4th of September at 10 o'clock a.m. So right now, the interest rate is 1.75. So there's really two ways to look at this. All right, guys? So that's really important, guys, when you look at interest rate monetary policy decision. All right? So you want to look at what's pricing in the market at the moment. So I found something really interesting for you guys. And this is pricing here. All right. So the percentage, the statistics of an economy and cutting rate within the economy. So at the moment, we're pricing in a 16.8% rate cut, and we're pricing in a 0.0% rate hike. So that means that obviously all central banks in the world at the moment are in a cutting cycle, an easing cycle. They're trying to devaluate their currency to help them to stimulate growth, stimulate net exports outside the world. Because if their currency is cheaper, they're more attractive. So people from outside will be more inclined to invest or either buy stuff but buy foreign goods within the economy. So at the moment, we're seeing 16.8% of a chance of a rate cut. So what is the main conclusion about it? It's we got either two choices there. So either we cut or either we don't cut. So if we cut, obviously 16.8% is not a lot. If we cut, we will see a Canadian dollar which will be weaker. So really important to understand. If we don't cut, that's where you will see the Canadian dollar. I'm sorry, guys. That's when you will see the Canadian dollar rally, and you will see confidence within the Canadian economy. Because at the moment, it's it's the only central bank in the world that didn't cut interest rate. And right now, we're not talking about cutting interest rate. So keep that in mind, guys, that it's really important. And one of the main banks in Canada, National Bank, says that they don't see there's no need for Bank of Canada to cut rates next Wednesday. So that could be really a game changer there. You guys, all FX traders, keep that in mind and prepare yourself for this. So yeah, David has a question. So yeah.
So that's awesome, Marc. Thank you. I just want to say for everybody out there. So if next Wednesday the Bank of Canada decides not to cut rates, that obviously, as Marc said, shows a lot of strength in the Canadian dollar. And what you want to do is, when you're trading technically, you want to trade technically in the direction of fundamental bias. So what I suggest for all you out there to do, which I'll be doing personally as well, is I'll be going over all the Canadian pairs, and I'm going to be finding areas of structure, potential flow, and I'm going to be doing my analysis on these pairs, and I'm going to be ready for Wednesday. I'm going to know if Wednesday rates are not cut. I'm going to know exactly what my plays are, and I'm going to identify that pre-announcement. Okay, so that's what everybody should be doing, not post, pre-announcement. You have an idea of what's going to happen technically based on the decision. Okay, so back to Marc if he's got more, and then on to Thigao.
Thank you, David. Yeah, so guys, can you still see the screen? Yes, I believe it. David, can you see the screen?
Yes, I can.
All right, perfect. All right. So, last thing I want to talk about, really important, is obviously, guys, if you have some chances and you want to follow me on Twitter, feel free to follow me, VJMark666. Obviously, so one thing that shocked the market today, it was the ECB not speakers. And what did he say? He said that there's no need to resume QE, quantitative easing program, at this time. Expectations overdone. That means really something important, guys. That means that the US and China trade deal will maybe see positive headlines following through the next month. Because think about it, the European economy is really not doing well at the moment. Interest rate are negative in two major countries in the Eurozone, France and Germany. So if the ECB, Mr. Nutt, doesn't see importance about keeping easing monetary policy decision and keeping that in mind, that is really hawkish. And that is because one thing, he's seeing the light at the end of the tunnel. He's seeing Mr. Trump and Mr. Xi making a trade deal, making a sort of concession. And you guys, it's all logic. We all know that Trump wants to get reelected, and he posted this week something really important I want to underpin. And this is just important. Just here. So Trump says he could do a quick deal with China and be a hero. And that is true, guys. That is really true. And obviously, that is positivism. And you will see market rally, and you will see safe havens sell off. And you know he can do it. So we're seeing, bad news. We're seeing yield curve inverted. We're seeing yield that are negative. Inverted yield, we're seeing, inverted yield. Inverted yield is really something particular I could talk about next week, but I'm sure you guys need to understand what inverted yield and steepened yield and flat yield means, and how to pulse the market sentiment there. But that is true. Trump can make a deal with China and be a hero, and we know it will come usually, because it's two of the major countries in the world. It's two of the broadest economy in the world, and they want to make a deal. Obviously, they don't want to create the recession. They don't want to go into 2 or 3 years of uncertainty, of easing. They want to keep growth in the economy. And we all know recession will come and will happen. But the question is, will it happen before the second mandate of Trump, or will it happen after or in the second mandate of Trump? So that was something really important I wanted to talk to you guys. For all equities trader, be aware of this, because when you are shorting equities, you are competing against uncertainties. If Trump makes a tweet, if something happened with China, positive headlines, And at the moment, you're seeing more positive headlines than negative headlines. So be aware, if you are shorting the market, take your targets much quicker than if you're long the market. Because if you're long the market, you'll be with the tweet. So that was something I wanted to talk about it. And finally, I forgot about this FX intervention. We heard about it last week. Definitely not off the table in the Trump White House. Mnuchin, Mr. Mnuchin says U.S. doesn't intend to intervene on dollar for now. So he wanted to, all know we wanted a cheap dollar, but for the moment, he's not intervening in the strength of the U.S. dollar. So yeah, so that's about it for me. Thank you guys. Thank you guys for being there today. Thank you, David. Thank you, Thigao. Thank you, Robert. And take care, guys.
Thank you, Marc. Appreciate that. That was really well done and said. A lot of information there for everybody. And you know, I hope if you don't understand or maybe things aren't clear, feel free to pause and rewatch. That's a beautiful thing about content like this is you can watch it multiple times. Anyways, on to Thigao Barbosa, who's head of trade management at FXG. All right, Thigao, on to you, buddy.
Hey guys, thank you, David, once again. Thank you, Rob, and thank you, Marc, for having us here. I wanted to show you this week on how to manage a proper entry after our criteria was met on the lower time frame. So I'm going to share my screen just a second. And okay, here we go. So we had a signal in 19th of August. It was USD Swiss franc. And actually, we have drawn our zones, our weekly bottom zone, our daily zone, and also our 4-hour zone. So over here, our criteria for our placement, for our trade placement, was supposed to be waiting for a break of our 4-hour zone to the upside, a retest and a rejection of the zone, and after that, a bullish price action confirmation before entering long. So several members came to me asking, how come and how can we make to optimize our entry in a situation like this? And this is what I'm going to explain to you guys right now. So when we have over here our confirmation, a push to the upside, breaking our 4-hour zone, okay, a retest of the very zone, and a very clear rejection over here in the 4-hour time frame. So what we can see, I'm going to rewind for you guys and show you in an example before we had our engulfing candle. So I'm going to put on replay over here, okay? And what we're going to have over here is the push breaking our 4-hour, first rejection, and what we can see from here is actually, as you can see, price rejected our zone beautifully, and straight after it gave us a confirmation. So from our confirmation, from price action confirmation, we had our entry valid. So now we're going to break this candle for you guys and show you how you can possibly optimize your entry on the lower time frames after our confirmation was given. So we can lower our time frame to the 1 hour, and we can see over here, actually, this is our full engulfing candle on the 4-hour time frame, okay? So this is our engulfing candle on the 4-hour time frame, from the bottom to top. What I want to show you guys is how we can manage to entry with the best reward over risk in this situation. So I'm going to show you right here how to manage this entry, okay? So now, perfect example. Over here in the 4-hour time frame, okay? Once again, our bullish engulfing candle, and you can actually see our next candle, he didn't get able to engulf or even to fill the 100% 4-hour engulfing candle. So you see over here that this candle, the next candle after our confirmation, is lacking like 25% of the previous candle, you know? So let's take this as an example of 100%. So the next candle failed to accomplish all the way down to 100% and left it 25% over here before it pushes up once again. So I can show you what's going to happen next. Okay, the next candle on the 4 hour after the confirmation also failed to go over here in the 100% completion of the engulfing candle. And what this shows us shows that bulls are in charge, shows that bulls are in command over here. Because if we lower the time frame, we can actually see that we had our bullish engulfing candle, and over here we had 1, 2, 3, 4, 5, 6, 7, 8 opportunities to go long in this pair. So our optimal entry after the engulfing candle on the 4 hour time frames would be straight over here when the following candle failed to complete the remaining 25% of the engulfing candle on the 4 hour. So for an optimal and perfect entry, we are supposed to wait for this movement on the 4 hour, a pullback, and enter for an optimal reward to enter on the lower part of the candle. So if we manage to put our position over here, okay, with the proper risk reward, and let me go back on the 4 hour to show you exactly how our target is going to be reached. Okay, so we found an optimal entry, we placed our entry over here, and now it's just a matter to wait for price to reach our target. So let's see. Okay, and then we go. Then we have our take profit to the second take profit nailed, because we actually were able to see that after a push and the confirmation from our criteria, we can actually lower one time frame and look for entries, because after a push in the bigger time frames, we will find an exhaustion on the lower time frames. So that's what I wanted to show you guys over here. And just a second, the image is stuck and it's going to go back. So that's what I wanted to show you guys. It was like an easy way to profit over here. Okay, so let's draw our zone once again. Just a second, guys. I'm sorry for the delayment. I refreshed the page and I need to do it again. Okay, so let's put our zone. Price then broke our zone to the upside, retested, rejected, bullish engulfing candle on the 4 hour. So we are going to lower the time frame straight after our confirmation to look for possible entries over here in the exhaustion of this pair. Okay. Once again, after you reach it and found all the confirmations on the bigger time frame and your criteria were met, go to the lower time frames after the push and the confirmation to find proper entries. Okay, you can actually see this example when price fails to retrace the full prior candle, the full confirmation. For sure, you can start to look at good points and good options for you to profit on the analysis. So once again, guys, I want to say thank you. This is the Thigao tip of the week, and I'm looking forward to see you once again next week. Thank you very much, guys.
Thanks, Thigao. That was great, man. Appreciate that. And he's absolutely right. So, you know, the important thing to remember is that every time frame has its own push and exhaustion cycle. So the monthly has its own cycle, the weekly has its own, the daily, the 4H, the 1H. So for example, when we see price action confirmation on the 4H time frame, we can take it down to the 1 hour time frame, just like Diego said, to look for then its own exhaustion on the 1 hour for even a sharper entry to the upside in that case, right? So Diego, well done. And okay, so before we finish today's session, I just want to mention that Forex Gentleman Latin America will be launching on Monday, September 2nd. That will be led by Thigao. He will be translating all my analysis, plus be doing all his analysis in Spanish and Portuguese. He will be converting all of Marc's information as well to Spanish and Portuguese, and we're really, really looking forward to that expansion. And feel free to, swipe up or to press the link, whatever there is there, to join the Forex Gentleman team and membership. We do offer a 7-day free trial because that's what you do when you got nothing to hide. Anyways, everybody, I just want to say thank you for your time, your attention, and on behalf of Forex Gentlemen, have a great day. And again, thank you. That's all for today. See you next week.